Throughout his 95 years, Warren Buffett has seen the market do many crazy things. He didn't just read about history, he lived through history. He saw the world panic when Pearl Harbor was attacked. He saw President Kennedy assassinated and the market close. He watched inflation devour families' purchasing power in the 70s when oil prices quadrupled. He witnessed World War II, the Cold War, the dot-com bubble, and the banking collapse of 2008. And now, in December 2025, if the Oracle of Omaha looked at the red charts this week, he would see something very familiar. He would see the old, well-known human fear. While most investors stare at Bitcoin falling from its highs, giving back months of gains in just 48 hours, Buffett would be calm. While the world reads headlines about China and American debt crossing $38 trillion, thinking capitalism will end next Tuesday, Buffett would likely be drinking his Coca-Cola and smiling. Why? Because he knows that fear is the main ingredient of the world's greatest fortunes. To understand what is happening right now, you need to understand Buffett's imaginary partner, Mr. Market. According to value philosophy, Mr. Market is a very helpful fellow, but he is an incurable manic depressive. On some days, he takes his medication and becomes euphoric. He sees only sunshine, infinite growth, and wants to sell you assets for absurd prices. That is what we saw in recent months. But on other days, like today, he wakes up deeply depressed. He sees only storms, wars, and collapses. And in his desperation to raise cash, he wants to sell you valuable assets, profitable companies, and scarce coins for pennies on the dollar. The drop we are seeing now in December, for the impatient speculator that Buffett criticizes so much, the one trading with leverage while staring at 5-minute charts, it is an absolute disaster. But for the follower of value philosophy, it is a gift. It is the market offering gold for the price of silver. Buffett's most famous rule guided the building of his empire. Be fearful when others are greedy, and be greedy only when others are fearful. And today, my friends, the smell of fear is in the air. Buffett has always warned about the economic storm forming on the horizon, inflation. He often says that inflation is like a gigantic tapeworm that consumes your dinner. It is an invisible tax on capital that punishes those who keep money under the mattress and rewards those who hold real assets and debt. The Federal Reserve is in an impossible position. They printed trillions, and now the bill has arrived in the form of high prices and interest rates that cannot come down. The time for free money is over. But what would Buffett do in times of persistent inflation and stagflation? He would never hide in paper money for long. He knows that the dollar, the real, and the euro lose purchasing power in the long run. His strategy has always been to own productive assets, businesses with an economic moat and the power to raise prices without losing customers. Buffett often uses a brilliant analogy about hamburgers. He says, if you are going to eat hamburgers for the rest of your life and the price drops from $10 to $5, do you cry or do you celebrate? You should celebrate, because now with the same salary, you can guarantee your sustenance for much longer. So let's apply this to today's world. Why is it that when the price of the assets you claim to love drops 20 or 30%, people panic and sell at the bottom? This makes no rational sense. If an asset was a good buy last week at $90,000, it becomes a magnificent buy today at $70,000. If the fundamentals haven't changed, if the mathematical scarcity of Bitcoin remains the same, the lower price is just Mr. Market having a bad day. But to act like Buffett, to have this cold blood, you need two non-negotiable pillars: cash and the right tools. First, cash. Berkshire Hathaway always holds tens of billions in cash, not because they love seeing money sit idle, but because they love optionality. Money is like oxygen. You don't realize you need it until it runs out. Buffett teaches that you must never, ever depend on the kindness of strangers. Leverage is the only way a smart guy can go broke. Only when the tide goes out do we discover who has been swimming naked. And this week, in December, we saw many gurus being washed away by the tide because they owed money they didn't have. The second lesson is about where you keep your wealth. Buffett has always chosen solid partners and banks with bulletproof balance sheets. In today's digital world, this means choosing where you trade. In moments of generalized panic, fragile systems break. Platforms freeze and prevent you from buying the dip or selling the top. If you want to apply the value mentality in the crypto market, you need an institution with deep liquidity, like BitGet. You need a house that allows you to buy value when everyone else is selling fear, without unpleasant surprises and without abusive fees that eat into your compound interest. I have left the information for you to analyze in the description, applying the due diligence that Buffett would recommend. Do not trust blindly. Verify. Now, looking to the future, to the horizon of 2026, many analysts will appear on television saying to sell everything. They will say that the global financial system is going to collapse and that this time is different. But Buffett's philosophy is historic. Never bet against American ingenuity, and never bet against America. Will the economy go through hard bumps? Yes. Is the $38 trillion debt a mathematical problem with no easy solution? Certainly. But real wealth doesn't disappear with a stock market drop. Real wealth is transferred. It moves from the trembling hands of the impatient to the steady hands of the patient. It moves from the leveraged to the liquid. Buffett has always said that the market is, in the short run, a voting machine, a popularity contest. But in the long run, it is a weighing machine that measures reality. If you bought real value, time is on your side. Time is the friend of the wonderful business and the enemy of the mediocre one. He harshly criticizes the casino mentality, the attempt to get rich overnight. Jumping from branch to branch, buying the trendy asset or the meme coin of the week is not investing. It is gambling. And in the end, the house always wins. He suggests a powerful mental exercise. Imagine you have a punch card with only 20 slots for your entire life. Every investment you make punches a slot. When the 20 slots are gone, you can never invest again. If you operated with this mentality, you would think hard before acting, wouldn't you? You would only buy what you want to hold for 10, 20 years. The winning strategy is to keep buying quality, accumulating satoshis, shares of good dividend-paying companies, or productive land, and the most important, turn off the news. If you plant an oak tree today, you don't dig it up tomorrow to see if the root has grown. You wait. The year 2026 will be a test of temperament, not intellect. As Buffett himself says, you don't need to be a genius to get rich. Investing is not a game where the guy with the 160 IQ beats the guy with the 130 IQ. You just need to control the emotions that make others lose their heads. Keep calm, keep your focus on the horizon, and always remember the fundamental difference. Price is what you pay. Value is what you get. If this analysis based on the principles of the greatest investor of all time was useful, subscribe to the channel. Good investments and sleep soundly.